All right, good morning, GFX traders. This is going to be a quick review on this morning's gold trades and a couple of things that I'm implementing into my strategy. It's all based on advanced candlestick anatomy, as you know. But what I've seen over the months, just purely trading the 30-minute, sometimes the 1 hour, moving up to the 4 hour at high volume periods is just phenomenal. So I went through that on the weekend with Maverick and Yuki, and I've done a fair bit of content on it. I think there's quite a lot of there's a lot of content on this in the FX Simplified course already. So if you haven't already watched that, go and have a look. And I'll just run through basically what I see and how to catch these moves from pretty much right at the top. Okay, so as you all know, right, candle opens, okay, opens, if it's bearish, wicks up and then goes down and then stops, right? And what it does is it creates a wick at the top and the bottom. Okay, so it opens, wicks up, moves down, closes, right? So in terms of price action, obviously it does this: open, up, down, up, down, up. Sometimes just slam down like gold this morning, up, and then close, right? That's simple, right? So how do we enter that? Do we go to 1 minute? Do we go to 2 minutes? Do we go to 30 minutes? Do we go to 1 hour? Well, you only need one thing, right? You only need the 4 hour candle, right? And if you learn to trust this process, okay, all you look at, I mean, you can have two charts open. You can have the 4 hour open on one screen, and you can have the 1 minute, 5 minute, 15-minute open on the next screen, right? So what happened, and this is how I've been entering. I'll wait for the open, right? First 5 minutes is a no-go. You don't want to be entering in the first 5 minutes of the candle, first 5-10 minutes, whatever, because what will happen is this will happen. And what I'm personally doing, right, is I'm putting a sell stop a few pips below the candle, but on the left hand side you may also see some structure in terms of the 30 minutes. So there may be a 30-minute candle body or a 15-minute wick or something else. So I'm confirming it with a lower time frame as well. You can either just purely wait for the wick to come up, because it with the 4 hour, right, it's very easy. It's very easy to predict where it's going, right? You got a 4 hour big bearish candle. What you do, wait for the wick up, down again. We've got support created. Where's the likelihood this next candle is going to head? Well, it's going to head into support. Well, it may not look like much from here, but to that support you've got like 30-40 pips, right? So even if you're just taking a 1-to-1, if you trust that, you know, potentially these candles are going to move 100, 200, 300 pips sometimes, then there's a very high chance you're going to get 0.5% risk and very, very handsome profits, right? So I was in here yesterday, right, and I got tapped out of break even. So that annoyed me. I went to bed annoyed. I went to bed really annoyed, right? So this was the 4 hour, 2 o'clock, and it gets a bit choppy in New York Stock Exchange. So I'd entered, come down, right, okay, moved to break even because we're breaking these lows, ping back up 2:30, 3 o'clock, pow, and you know, that went 300 pips in about 30 minutes. So that would have been about 12 fucking grand. Anyway, regardless of that, it doesn't matter. We wait for the next one. Happened again, right? So the wick comes up, and look, when it moves down, starts to pass. So you could either enter basically on this bit here, right? When you've got a 30-minute closure, it's only 54 pips, right? In high volume periods of the day. And if you'd held it, you know, you've got 2.5 up. This one here, okay, and this is the type of volume. So I was entering here on the break, just purely on the break. Just the fact that I was only entering on the fact that the 4 hour had a wick to the upside and then moved bearish. So I had a pretty tight stop loss, right? And within 30 minutes, this had gone 12R. That's £12,000. Anyway, so that's what I did this morning. Same thing, although I did right. So I kind of pinged one off this manipulation point on the 1 minute, and then I entered again. So I was already in the trade. I moved this to break even. Once the wick had come up, I moved to break even. Now as it started breaking down, I re-entered again on the 4 hour. Basically, the fact that it's moving bearish, right? So as a wick come up, okay, came to the entry or the other one. As it moved down, I moved that one to break even, and as the candle turns bearish, right? It's a candle flip, right? Moves, wick up, moves down, and then pow, right? Literally, I got 69 pips on one, and 60 pips on the other one. Now, again, if you look at what happens here, right? This yesterday was carnage, messed me about a little bit. But if you look at the basis of what I've just shown you up here, if I can find it, right? If you look at the basis of what I've done down there, it's exactly the same. The wicks come up. I've now got a 4 hour wick to put my stop loss, right? I've got a 4 hour wick. So if you're going to put your wick, if you're going to put your stop loss anywhere, the 4 hour is a pretty damn solid candle to use for your stop loss, right? As it moves down, it moves bearish. Sometimes it just fluctuates like that. But I got a bearish bias for the day. My bias is bearish, right? And I'll show you again an example of what I mean by that, right? We're moving bearish, and then we're going to pull back to create a low wick, right? So when the 4 hour moves, it moves up like this, up, down, and this is why I'm getting up at 5 o'clock in the morning so I can trade that 6 a.m. candle. I got 3 times a day where I can enter: 6 a.m., 10 a.m., 2 p.m. right? So if I stick to those rules, and if you're following me in this, then fantastic, right? Because this is such a simple entry, and it's based on one candle 3 times a day. So if you miss the first one, you don't have to sit at the charts waiting, looking what's going to happen next. Just go away, come back at 10 o'clock. If you still don't get, you know, because sometimes the wick might be a little bit high, right? It comes up a bit too high, and it can put your risk to reward off, right? What I'm looking at here, right? This level is new, right? That's part of the new analysis. So I'll just hide that sec. But what I'm looking at here, this is clear traffic, right? The net from this support here, right? Because this is broken, right? This is why I pinged one entry off on the 1 minute, because we're closing below here, right? Closing below here, and we're closing inside this range. So this is the new range, okay? This is the new range. We're closed now. We're trading for 1, 2, 3, 4, 5, 6, 7 candles, 3.5 hours we've spent underneath this in this range here. So if it can't break back inside this range, what is the most likely outcome? Once support is broken, it becomes resistance, right? So once we're in this area, right, I'm only looking for shorts. I'm not looking to break above. If you read the 15-minute strategy guide, how many candles below a level? It's 2 15-minute candles before we rule out that level, right? If you read that strategy guide, it's 2 15-minute candles. We spent 3.5 hours underneath this level. So why would I look for longs? Why would I look for a break above? Because in order to go long, basically you want to break this structure up here, because this is the new low currently, small low, whatever. We want to come up here. We don't want to be buying until we get above 23.83, right? Because you're going against the trend. So the next port of call for this trade was only going to be down here. And why is that? The reason is because we've got clean candles, two 30-minute candles, 1 hour candle, right, all the way up here where there's no support until we get to 23.58. So I should have held, but you know me, I trail my orders, and I trailed it quite aggressively because I took a couple of losses yesterday afternoon. I wanted to claw them back. So once we had this break here, I just trailed it to what made up for yesterday's losses. So yeah, I'm up 5 or 6% this week, so can't complain at that. Anyway, for today, all right, let's put that level back on. So right, for today, right, we're now into, let's remove these as well because we don't need these for the analysis. So now analysis now for the rest of the day. This was something I'm not in this, I was measuring this to visualize what's happening on the 5-minute time frame, just because I enjoy watching it. So right, we're going to go up to the 30-minute. Okay, so we've got support here at 23.69. Okay, we're now trading in between this range. The next range is it was this here, so we can either use this as it is, or it gets a bit choppy below here. So we've created a new support here, right? So let's move this down here. Let's call that 23.67, because that makes it a nice clean range. If we break back in here, I wouldn't touch anything until, so potentially if we break above here, there's still a high chance it could come down, because this is the 4-hour high here, right? So you want to break above the 4-hour and potentially go up like that. It would take a lot for me to take a buy off any of these lower levels. If we go to the 4-hour, so yeah, you look at these rejection wicks. This candle was sole purpose to come down and fill these wicks. We may break lower. So I would also go with this level here. Now again, it's the same principle, right? So if we look at the 30-minute and just move to the left a little bit, if we break this low here, let's use this. This is the current low, right? So have we got a round number here? Yes, we have, right. So if we break below 23.60, right? If we break below 23.60, we've got 40 pip range, right? So you get to break even. That's no problem. So if we break below here, maybe on the next 4 hour, 10 o'clock, hour and a half's time, we've got 400 pip range to here. If we look to the left again on the 4 hour, right, we've actually got clean range down. We'll pay attention to this here, but the actual 4 hour support would be here. So we could potentially be going down to 23.43.88, right? So we personally wait for this 4 hour closure. This may cause a little bit of a kerfuffle, but if we go down to the lower time frames, we've got two levels here, right? So you can either use the first one, right? If you're not happy using the first one, use the second one, because there is clean range there. You've got another 100, 118, 120 pips. So I would pay attention to what's going on here, because there's very high chance that we are going to go down here. If we just take a quick look at the daily, yeah, the daily could be heading down here. So I mean, nothing's impossible with gold when it moves like that. If you remember, let's not confuse this anymore. Let's take this one off here, because as you move up the time frame, right, resistance support, right, this is broken under here, right? As you move to the 4 hour, right, we're now looking at this level. I'd forget this, okay? It's already been wicked once. So if it was an order block, which people would cast their eyes to, it's already been taken by these two wicks here. That's the first one, that's the second one. So we'll use the current 30-minute time frame. We're going to use today's low, right? and if we get going, which it looks like we're going to do sometime soon, yeah, you potentially we've got a long way to go yet before we even consider moving it, because yeah, we've got old charts. Support, take your profits before here probably would be a good idea. Regardless, I mean, gold has just decided it wants to start tanking. Take the stairs up, take the elevator down. When these shorts get going, they move fucking fast, right? So right, those are my levels. That's the analysis on this morning's trade. So from here on in, we are going to be looking at break below 2360 and a closure if it's before the next 4 hour. Otherwise, move up to the 4 hour and look for your shorts. When the wick comes up, take a short. When it moves down, then we've got these levels here, right? So yeah, happy trading, guys. I'll see you in the next video.